Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. Today is May the 9th and the chart of the day for today is the USD Yen. 45 minutes time frame here. We ended with 3, which is sort of the last high we had before the supposedly the Bank of Japan intervention here. That's what I've been reading. They've been intervening every now and then to basically control the rally in the yen pairs, right? And here we ended with 151.8, and now we have since started to turn higher again, rally higher. Now, a couple of things first. Let's take a look at the structure here. We can see this pullback over here, and if we just simply measure the extension of this A and the B, we can see we don't have any long extension. In fact, it's only slightly below the 100% before it starts to rally higher. So I think that means that I think we can call this structure as an ABC, okay, because there is no extension on your third swing. Now, if this is an impulse, it would have been better to be 1-2 with extension to 1.618. That will make it more credible as a 5 ways down. Now, there is another possibility in which we might be tempted to label this as a 1, 2, 3, 4, and then this is a 5. I guess I wouldn't say it is impossible. It is possible, but like I said, because there is no extension on the third leg, right? There's no extension on the third leg here. It's only at the 100%. Then this probably is the more aggressive view in the direction of the trend. Again, the trend is bullish. Secular trend is bullish in the yen pairs, and therefore, and this view carries better probability than calling this as a 5. Let's say a 5 ways down, ending A here, which is possible. I wouldn't say it is totally impossible. It's possible. So you can call this 1, 2, 3, 4 without extension on the third leg, and then this is a 5. So that is a possibility there. Let me double check. Yeah, it is a possibility because this one, for example, the 5 is going to be shorter than the 3, even though the 3 is not really that much longer than the 1 here. Okay, so it could be like a diagonal ending A, and this is your B, and then sell off again in the C. That is a possibility, right? But technically we are now in what I call a transition period in which we bounce from the 100%. In fact, if you look at the 4-hour, this one, like we mentioned before, we got a 3 ways down. If this is AB, then this is bouncing precisely from the 100%, more or less 100%. We did buy this, by the way, in the service in the live trading room. So the position is already safe now because of the rally. We take partial profit already, move stop loss to our entry level, and therefore it doesn't matter what the market wants to do now. If it fails to extend higher, because at this point after the bounce, we need to break above this peak to confirm that the correction is really over, right? Otherwise, if not, then we can do a bigger, like I said, the alternate will be this is an A, this is a B, and we're going to sell off again in the C. Now, if that happens, it's going to find another buyers again here when it reaches the 100% extension at the lower levels, right? So understanding the technique then therefore is very important, because if we only trade when it reaches the extreme, then we have a higher chance of reaction, at least something like reaction higher like this one, for example. After reaching the 1, 2, 3, 100%, you can see the reaction already. So if we enter at the right moment, then we have a higher chance of some sort of reaction. But here we are in the middle, we are in a transition period. Then at this stage, it's not really at the extreme area anymore. So the other option where it can get a double, like this is A, B, C, becomes a possibility. So if you are chasing this, for example, in the shorter cycle, there might be higher risk that it actually will not extend higher, and it can do a double and breaks down into a bigger APC pullback. Okay, so for now though, the right side still remains bullish in the yen bears, right? All of the yen bears, and here we bounce very nicely after reaching the first 3 swings down from the peak, and now we are waiting to see if we can actually really extend higher. Break above here is going to confirm the next leg higher starts. If not, then we can chop around a little bit or do a double even like this before it starts to rally higher, right? I think in general the yen bear is not going to be going down unless the Bank of Japan intervene all the time, right? So I think the market itself is still very much bullish, and they will continue to find the tips of any pullback in 3-7-11 swing. All right, so that's the update here, guys, for today. As always, if you want to get more updates on the Forex, commodities, or indices stock market, feel free to check our service. We have 14 days trial, and the link is in the description of the video. So see you all again next time, and have a nice day, everyone.